All right, welcome back. We got our weekly stock market update, and we're going to talk about how we're at a critical moment here for the stock market and the outlook potentially for the rest of the year. So before we get into some of the charts and the numbers from this week, I want to just talk about some stats when it comes to the S&P pulling back 10% versus 15%. Last Monday, we did pull back officially 10% in the S&P. The Nasdaq is already down more than 10%, but we're just going to focus on the stats for the S&P because it's been around longer. So when the S&P is down 15% from its all-time highs, the odds of falling into a bear market, which is a 20% or more decline, increase substantially. So when we look at previous data, when the S&P has fallen 15%, it's entered a bear market about 60 to 70% of the time. Versus when the S&P is down 10%, it's only about a 30% chance that we can get into a bear market. So we dropped 10% already, so there's a 30% chance that we enter a bear market. If we drop down to 15%, the odds of a bear market increase drastically. So that's what we're looking at here. So we dropped 10%. I was hoping that we see a little bit of a bigger bounce. We had a little bounce, and it just rolled over the rest of this week. So I'll let you read the rest of this if you want. But to me, this is a very important bounce that we needed in the market, and it didn't sustain. In fact, it looks aggressively rolling over. So let's go ahead and take a look at this week's action. When we look at the heat map, we did have a bounce in Tesla, some retail names. Apple had a bounce, but pretty much everything else red. You did have some oil names and some of the defensive names like Pepsi, Procter & Gamble getting some inflows. So a very risk-off type of market this week. Google down 5%, Microsoft down 1.5%, Meta, Nvidia down 6%, Broadcom. The semis rolling over hard. We'll talk more about the semiconductors when we go through our individual names. But just not a good week, especially not a good second half of the week. So let's pull up the futures. S&P 500. Boy, this is ugly. Let's zoom in. You can see we had a nice bounce here, and we just quickly puked right back down. So next week's going to be a big week to see if we can drop further or if we can bounce back up. But this selling is pretty aggressive. I would expect for us to make potentially new lows next week. Nasdaq, same thing, just more aggressive. Nice bounce back up. 3 straight pukey days to the downside. And we may close on our lows. We've got about 20 minutes left for the market, and we are at our daily lows right now. We won't talk about the Russell. It's probably just getting hammered. Russell 2000 is very weak. Gold, all-time high, again, shows the defensive stature of the market. Sell equities, buy gold. You've got oil not doing anything, so that's good. I am seeing that gas prices are starting to come down, so that's good. We'll look at the Dow Jones real quick. Same thing, bounce, rolled over aggressively. So just the market in general. Let's take a quick look at rates because rates are down a lot today. They've been all over the place this week. We've had some big moves back to the upside, and that gave it all back yesterday afternoon, and today a huge down move in rates. Again, defensive. Rates are going down because people are buying bonds. People are selling stocks, and they're buying bonds, and they're buying gold. They're getting defensive with their portfolio. Maybe they're looking at the stats and saying, ooh, we rolled over aggressively. We're probably going to get down to a 15% pullback in the S&P. And if that's the case, the odds of a bear market, 20% or more, is pretty high. So maybe that's what the market is sniffing out. So that's good. But again, when it comes to interest rates, we are just chopping along here. We're not really moving in any sort of direction. We'll go up 1% one day and then down 1% the next day. So this week we're pretty much flat. We haven't really gone anywhere. So we'll see if we can get some follow through there. Let's go ahead. Let's go over the rest of the news, and then we'll go over some individual names. Come on now, why does this keep popping down here. Here we go. So there wasn't a whole lot of news this week. We already talked about the indices. Now, economic data, not a whole lot. We did have some PCE numbers. Nothing that I saw that really, made a big move in the market. Consumer sentiment keeps coming in weak. These are numbers that we've seen the trends for a while now. Nothing's changed there. Gold all-time highs, we talked about that. There was a couple of earnings the last week or so. Nike and Lululemon, really bad reaction to earnings. Their numbers are not looking so hot. Both of their guidance was pretty soft. So again, this is matching up with the consumer being weak. The airlines are getting trashed. Now they're seeing decline start to fall pretty rapidly. Now, how much of that is going to be business travel for the airlines or even government travel versus the consumer not wanting to go on spring break or whatever. So the big news is the tariff. So we're having a new segment here in our stock market update, which is going to be tariff talk. This week there was 25% tariff on imported vehicles and parts. So this was announced, and some countries and companies are saying, okay, we're going to build a plant here, take the tariffs off. So this was a new development this week, but the big deal is going to be next week. April 2nd is going to be the full layout of tariffs and reciprocal tariffs, and we'll see if it's legit, because right now we've got tariffs, we've got no tariffs, we got a lot of tariffs, we got less tariffs, we've got more tariffs, but not a whole lot more. So it's really all over the place. I just want April 2nd to go by and see what is actually going to happen, and let's stick to it, or let the market figure out, is this legit or not. So maybe we get a bounce after that, because there's a lot of fear fear of the unknown. So once we get past April 2nd, hopefully there's more things that are known when it comes to tariffs. So we'll talk more about that next week, but I do think that's going to be the big catalyst for the market moving forward, is what is legit, what is just flapping our gums around. Okay, let's go ahead and talk about some individual names. Amazon, I mean, that's just so ugly. And I bet a lot of these stocks look like this. Nice 3-4 day bounce and give it all up in just a couple of days. So Amazon, I do have some buy targets set up for 184. I'm trying to get filled on a few shares on one account today. I'm not sure if that'll happen. But my next buy points for Amazon are going to be 184, and then I'm waiting until 170. But definitely not looking so hot here. One thing I'm a little, I wouldn't say unhappy or upset with, I really wanted to use this bounce to put on a ton of covered calls on my stocks. But the premiums just weren't that great for stocks. So I did have some covered calls on Amazon. I do have covered calls on Tesla, on iBit, but I didn't get covered calls on Google and Nvidia. So that's a little bit of a bummer. So I'm hoping the next time we get a big bounce like we did last week, that I can, and at the beginning of this week, I'll be able to throw on some covered calls and get some good premiums, because volatility collapsed a lot at the beginning of this week and the end of last week. So the premiums for selling covered calls were not that great, except for Tesla. Volatility is always high on Tesla. But that's what I'm looking to do for Amazon. Google, that's 3 huge red days. Again, this is what's giving me concern, is the speed of these sell-offs. It's such a tiny, weak little bounce and then a huge sell-off. So my next buy point for Google, I haven't bought any shares on this dip. I have bought some Amazon, and I have bought some of the Qs and VOO and Nvidia. Those have been my buys so far, and they've been very light buys. That's for me. This is not financial advice. Do what's right for you. Do your own research. I'm just explaining my thought process, so hopefully you can make the best decision for yourself. But as far as Google, I'm looking to buy some more at 148 if we can get there. Looks like we're just a week or so away from that. And then after that, I may stay put before I look to buy some more, because I'm sure if Google gets below 148, there's going to be other things that I'd like to buy. Tesla, again, nice bounce this week. I have the 300 covered calls on. I did have to roll some out to a little bit further than I'd like to have, but I have the 300 covered call for Tesla. My next buy point is going to be 112, maybe 125, depending on how the market looks, but I really think we're going to roll over hard again once we start to see some of the delivery numbers and the earnings numbers, and we'll see how the sentiment is continuing for people lighting Teslas on fire and things like that. We'll have to wait and see. But this is just a huge, this whole move right here. I wish we could just wipe this off of the chart because this just looks like a huge kind of manipulation deal. We've really kind of been in this range, which makes a lot more sense. For us to be within this range of 300 to 150, that's a huge range. But this huge move right here probably just made no sense that we even had this move. So I would expect us to keep chopping around between this 300 and maybe 180 level or so. But next buy target for Tesla is going to be 212. Bitcoin, we didn't really talk about Bitcoin, but I am looking to start accumulating more IBIT if we can get down to the 45 level. And then I will look to put some more Bitcoin on cold storage. I have an order in at 74,000. I think these orders coincide with each other. If Bitcoin gets down to this level, I'll get filled on IBIT and I'll get filled on some Bitcoin that I will move into cold storage. But Bitcoin's not immune to bear markets and recessions. It's magnified by them. So we'll have to wait and see. Again, I still think we'll probably have more chop like we had here. We had a big move up. I've talked about this before with Bitcoin, and then we have a 150-day chop, and then we make our next move up. Wouldn't surprise me if we have another, handful of days where we chop around until midsummer, and then we make another move back up if the market sentiment isn't killed by then. Let's take a look. The Qs, again, just a hard rollover here. Really sad to see. And my next buy point on the Qs, I did buy some last Monday. I will look to buy some more around the 450s for the Qs. We are currently down on the Qs from all-time highs, 13.5%. And VOO, this is an S&P 500 fund with very low expense fees. My next buy target here is going to be around 495, and that's going to be an 11% pullback from the all-time high. Now 475 is going to be that 15% correction that we've talked about, that if we get down there, probably looking at a bear market. And I'm not shying away from a bear market. If we have a bear market, so be it. That gives me a year or two to buy assets at a depressed price. So that's why I'm not jumping for joy right now to go buy the dip, because I do think the possibility of us pulling back even more is increasing the more we go down, obviously. But when you have pullbacks, you got to take advantage, because no one knows. We could shoot right back up from here. Things looked really good at the beginning of the week that maybe we recover, and then we've rolled over really quick. So nobody knows. But if we have a bear market, it's not the end of the world. I'm not selling anything. I am going to be happy to continue to buy things, but I have to pace myself, and that's why you see me spacing out my buys, having a plan, and just sticking to the plan as the market continues to move around. So Nvidia, I did buy some, luckily, here around the 106, the last dip we had. Haven't done anything since. My next buy point is going to be 95. I believe there is one account that I need to get a little bit more exposure to Amazon. So I may look to buy some more around 105 when we get back there. But then I'm really going to have to cool it off until we get down to 95 or so for Nvidia. There was some tariff chip export talk this week. So we'll see again how much of that continues to actually stick. we'll have to wait and see. Again, next week I think we'll get a lot of clarification on certain things. We'll scope over the updated shopping list in just a moment. The other thing I wanted to talk about was the SMH. This is the only thing I've sold in this pullback. Now the SMH, I started buying a long time ago in the SMH. I'm concerned here for the SMH, so I took some profits, and I'm going to be rolling the SMH profits into VOO and triple Qs. So instead of being in just the semis as an ETF, I'm going to roll that into the triple Qs, which is NASDAQ and the S&P 500. So had a lot of gains on the Qs. I just see a case, if we really go into a bear market, that it's going to be led by the Qs. They look really weak here, and I'm concerned that we could possibly drop and lead this market into a bear market, because they were the leader on the upside. They look like they could be the canary in the coal mine and the leader to the downside. So I did cut my position last week at around 217 or so. But it wouldn't surprise me if the chips have a 25% drop, and if that's the case, I will be buying Nvidia and probably AMD and potentially Taiwan Semi if we can get a really good discount there. So this is one of the most important charts that I'm looking at. If we continue to show a lot of weakness here, I think that's real bad news for the market. And if we can show really good strength, then I think that's good news for the market. But I just don't see I don't see the strength in the semis. Nvidia is a killer name, and that is not showing any signs of strength. So that's one that I'm really looking at. I will look to get back in if we get back to 150. I started buying SMH under 100. So I wanted to lock in my profit there and look to diversify that position and double down on the single names that I like Nvidia. Okay, so that's going to be it for the single names. We've gone over a lot here. Last thing I wanted to share with you guys is going to be the updated shopping list. Again, this is just my shopping list. You do what's best for you. I'm just helping you guys, hopefully helping give you guys an idea of some of the things I'm doing to prepare if we do have a larger pullback. So I already talked about some of these names, but here is the updated list. Another ETF that I'm looking to start a position in is going to be JEPQ, a covered call ETF. So looking to get some of that at 49. Here's my Amazon targets, Nvidia targets, Google, Tesla, Coinbase. I bought that at a terrible time, so I'm sitting here holding the bag, selling covered calls against that, which I'm okay with because I did really limit my crypto exposure, and I have Bitcoin and Coinbase, and that's it, and I'm okay with that. But I'm going to be waiting a long time to buy some more Coinbase. And then some other names here. I need to update SoFi. I'm going to leave that blank because I'm not sure. And I need to update Meta. But some other names I'm really looking at is building a larger position in Costco. And I'm looking to potentially build a position in Uber and also build a bigger position in Chipotle. So if the market really goes into the toilet, I'm hoping to scoop up some of these names that have been very hard to buy because they've been so expensive. And if we can get a pullback, I'm looking to buy something like Costco and even Chipotle and Uber if we get a nice pullback. So sorry for the longer update. A lot to talk about this week, and I'm sure there'll be a lot to talk about next week. But that is all I got for you guys this week. Have a great weekend, and we'll see you next week. Peace out.